All right, so the second favorite trading indicator or trading tool is whatever you want to call it. Most of you probably heard about it. Is Fibonacci. Very powerful and very nice tool that can be used for different types of your needs. So I use it for two things. I use it for my entries and I use it to identify the strength of the trend. Why I want to expand on this a little bit, because I have a couple settings that are probably different than most of you guys. You will be able to add these in the next slide. I'll show you my whole settings and colors and everything for the Fibonacci. But first, I want to get back and talk about identifying the strength of the trend. We already covered it a little bit when we talked about overall bias, but before we continue to entries, I want to touch on it a little bit more. So now, once again, once we look at the charts, we can identify the strength of the trend using Fibonacci. If we pull the Fibonacci from swing low to swing high, we can see how the price barely touched the 0.382. Now, if we identify, so basically the market moves in phases. It has push, retracement, push, retracement, push, retracement. And I use this tool from start of the push to end of the push. And this is the retracement. Start of the push, end of the push. This is the retracement. So now we identify this as a strong trend since the price wasn't even able to retrace to 0.382. Now we have another phase in the markets and we can see how this time the price retraced to 0.705, showing a deeper retracement. And now this time, once we pull out to the next push, let me clean this up, we can see that the price retraced even higher. So now, by looking at the charts, once again, setting my overall bias and looking at the strength of the trend, I can notice and I can identify that the price is moving down, but that each retracement is getting deeper and deeper. And what does it mean? That means that the price is telling me that there is more and more bulls stepping in at each move to the downside. So we can expect that the price may move higher. And now I need to be more cautious with my short setups. So basically either avoid short setups or use higher, bigger stop losses to avoid getting faked out since there's more and more bulls stepping in. And let's see what happens later. Boom, the price reverses. And we identify that just by using a simple Fibonacci tool, just identifying that each retracement that we had in this single market phase, in this single market push, we identified that each retracement is getting deeper and deeper. And now we expected this push to the upside. So now once this market structure was broken, we can start to look for long positions, right? So very, very simple. Your job as a trader is to gather as much information as possible to have the edge in the markets. To have the edge in the markets, you need to be first. You need to be first to identify, and Fibonacci tool helps you to do that. And this is your edge. This is your edge by identifying that, like, you need to, like we talked about traits that professional trader has. Professional trader has adaptiveness. It has to be adaptive. So now once you notice this, and once you're first to notice this, that each and every one of the retracements is getting deeper and deeper, now you need to understand, like I told you, maybe I need to be more cautious about my short trades, or I need to avoid them, or I need to use a bigger stop loss because the retracements are getting deeper and deeper. And what does it mean? It means that more and more bulls are stepping in each and every push to the downside. And another reason why I use my Fibonacci tool is for my entries. So as you may probably notice, I do have some different zones, some different percentages on my my Fibonacci, and they are both marked in red, which is 0.705 and 0.79. I use this as I was just back testing, doing multiple tests, and noticed that these two zones are very, very well respected. So how do I use it to my entries? Now, if we go to the 1 hour chart, we do see this indecision supply. And if I drop to the lower time frames, what I can do is basically I can pull a Fibonacci tool from this swing low to the swing high of the from swing high to the swing low of the push, and you can see how well the 0.705 is being respected. Now, if I were to draw this Fibonacci and the price was trading above both of these levels, this is my red flag. If I see this, I stay away from the setup, because this means that the retracement is very, very, very super deep, and you should not be trading this, because the retracement is almost as high as the start of the push, and we might expect a push to the upside. Now, once again, all my steps: identify a bias, identify magnet zones, identify support and resistance, identify supply and demand. We can use other tools to support our decision. So we can use fixed range volume. As you can see, we have a spike right at our supply. Also, we use the Fibonacci to perfect our entries, right? So we can see that these two levels of 0.79 and 0.705 is sitting right at this supply, and also on top of that we have a profile volume spike. So once again, my job as a trader is to gather as much information. So I gather that the trend is down. I gather that the next target is the magnet zone below. I gather that the price is respecting the daily resistance. I gather that we have a strong momentum and we have strong bearish candles. I gather that the price broke below the supply. I gather that the price came back to supply, and the supply is also on top of these Fibonacci's. And also we have a fixed range volume spike. So I have all of this information, and this is your edge. It's not just gathering information just of the trend or of a single candle, but gathering different types of confirmation that builds your trading setup. So now your probability of this setup playing out is not 50-50. It's more like with each confirmation, it gets higher to 55, 60, 65, 70, 80%. And this is your edge. The more confirmations you have to your setup, the more likely is it going to play out. And you have to do the same stuff over and over again to have this consistency that you need. So basically, I look at this, I see the price rejecting 0.705, and I need an engulfing candle to the downside. We have an engulfing candle. Our stop loss is just above the supply, and the targets, whatever you want it to be. For example, these lows, nice 1 to 3 risk to reward trade. Also, if you want to be more aggressive, you can set your stop loss just above 0.79. But also, once again, I want to stress this enough: never use sell limits and just expect and guess that the price is going to reject. Yes, in this example, the price rejected it perfectly, but it's not always perfect. You want to wait and see for the price to come to this level and reject. Now, another information that we can gather is looking at this. Like, the way I read the candles, the way I see this price action currently is that the price found nice support and is going up with so much volume, so much momentum to the upside, right? But what happens as soon as the price approaches these Fibonacci's and this supply, even though we had this strong of a momentum to the upside, the price slowed down and invalidated this push. So a lot of bears were sitting here. Like, that's how you read the candles. You see that, wow, a lot of bulls are stepping in here on this candle, on this push. But as soon as we approach this level, we start rejecting. And now I'm reacting. I am not guessing. I'm not hoping that the price is going to reject. I'm reading the candles. I'm reacting. Okay, the price came to this level and started rejecting. So this zone is valid. Now I'm reacting off of this level. And this is how I play the markets. Simple as that. So Fibonacci, probably all of you know how to use it. The main thing is you need to add these settings to your Fibonacci. And here, those are my settings. You can stop the video. You can copy. You can take a picture with your phone and copy these settings. You can do your colors, whatever you want. But these are my settings to my Fibonacci tool. You can copy and paste them. Now, another thing I want you to understand about Fibonacci is if you use Fibonacci levels such as 0.382 or 0.5, you're most likely going to have a higher win rate, right? Because it indicates this trend is strong and it is more likely that the price is going to go up. Now, if you use these two, you're most likely gonna have a higher risk to reward but lower win rate. So it's your choice on what you prefer. For me personally, it depends on other things. I use both of them, but once I see a retracement to these levels, I expect that this trade is less likely to play out. This is why sometimes I use lower risk, and then I do the opposite. If the price respects these levels, I might use a higher risk and a little bit higher stop loss. So my risk to reward is going to be lower, but it is more likely that is going to play out. And this one, the risk to reward is going to be higher, and it's less likely to play out because, once again, the fact is that the trend is very strong and the retracement is not as deep. So we still have a lot of, in this example, bulls playing the markets. And in this example, the push is very strong, but the retracement is strong as well. So we have a lot of bears sitting in the markets at that current moment as well. Once again, bigger retracement, smaller stop loss, higher risk to reward. Smaller retracement, bigger stop loss, lower risk to reward, but higher win rate. It all depends on you. And last but not least, some of the rules. Never, once again, as the previous indicator, this indicator as well, never use this as your only source of information to enter the trade. Also have supply and demand areas. Also use the fixed range volume tool. Also use the candles as your confirmation, and only then use this to maybe perfect your entry or set your stop loss or indicate the strength of the trend. Same as fixed range volume. First find the zone and only then use indicators to support that zone. That's all I have for Fibonacci.